Thanks so much for tuning into the trade setup with me, Niraj Shah. And it's, well, a bit of a relief because while it was a stick earlier, it is the carrot now from Donald Trump. And that is the big thing, right? Every day, I think we'll have to title a segment called Trump Moves. For today, it was first the stick and then the carrot. And the reason I say this is because Mexican tariffs have been put on hold for a month, even Canada, by the way, for that matter. And US markets, as a result of that, recouped losses after Trump paused the tariff wars. US will help stem flow of weapons into Mexico, or Mexico, as you would want to pronounce it. And in exchange, Mexico will send 10,000 troops to the US border to help block fentanyl and migrants. This is the relatively easier one, migrants. Fentanyl is a bit difficult one. Trump has also agreed to delay tariffs against Canada, as we said. So, except China, but the other two trade wars, a bit of a negotiating tactic. And the US markets recouped some of the losses as a result of that. So, well, did they end in the red? Yes, but they were way lower in the red, and they ended only 0.25% lower. Futures, as we say, are in the green marginally. Nasdaq has other issues of its own, by the way. Asia, though, is a tick of green. At least China is close, but Hong Kong and Nikkei up about 1.67%. I think our market should be showing some upticks as well. Yes, circa 100 odd points, so not bad. And we did show a bit of resilience in yesterday's session to viewers, mind you, so keep that at the back of your mind. So what's the trade setup? I think a relief rally or bounce back on the cards, but 23,500 is the key level of resistance because we've skirted with that level but not quite eclipsed it, so keep that at the back of your mind. IT and BFSI are looking stronger than others, and therefore you want to keep the two major indices at the back of your mind if you're trading large caps. And rotation out of high PE stocks and the fancied sectors is the key template. Almost everybody that I speak to speaks about getting out of extremely expensive renewables into more moderate sectors. Large cap banks come firmly in favor. Some of the IT stocks which are reasonable come firmly in favor, and hence I was saying that BFSI and IT look stronger than others, so bear that in mind. I think this is the more important one, currency considerations. There was pressure on offshore yuan, and that could be pretty intense when the trading reopens later this week officially. But as I said, in Hong Kong, offshore yuan traded in Hong Kong at a record low against the dollar on Monday before clawing back some of the losses. And therefore, viewers, remember at 9 o'clock when the money markets open for India, the rupee could be under pressure because the rupee is tied to the hip at the yuan. There is no way that the yuan will depreciate and the rupee will not. Reason because Indian exports will lose their competitiveness if indeed the yuan were to depreciate and the rupee were not to. So I would reckon that there will be pressure from the dollar on all key indices, and if the yuan in particular were to depreciate, I think the INR will depreciate as well. So please don't get perturbed if the rupee is showing 87, 87.5, maybe even 88, who knows. It's the nature of the day, and there's nothing, literally nothing that we can do about it. And we shouldn't also, because the exports deserve that competitiveness, if you will. Okay, let's try and talk about some key stocks to monitor in the session today. Premier Energies, I was talking about expensive renewables, but look at the numbers. 2.4 times revenue, margins expand to 29.9 versus 17.3, net profit up 5.9, nearly 6 times uptick in PAT at 255 crores versus 43 crores. Remember, the stock is trading at about 54 times FY25 EPS. If they show growth in FY26, then it could be cheaper. So I must admit, Premier Energies, yes, expensive, not egregiously expensive. That's the point I'm trying to make. So watch out for this one. May react positively to the numbers. NLC India will definitely react positively to the numbers. Revenues up 39%. Margins at 41.4 versus 20. No, let's stick with that plate for a moment. Margins at 41.4 versus 28.6. The estimates were 21.7. Blockbuster numbers on the margin front, as a result of which the bottom line numbers look solid as well. 668 crores, estimates were 244 crores. I would reckon this one will show a positive reaction. A couple of others which have a positive reaction. Gland Pharma, revenues were down 10%. You would wonder why I'm saying it's positive, because the margin performance looked rock solid, 26% versus 21.7%, as a result of which the net profit number showed up, a 6.7% uptick at 205. So despite a 10% downtick in sales, good margins, good bottom line, maybe the street gives it a thumbs up. I'm inclined to give it a benefit of doubt. Castrol, revenues up 7% at 1354 crores versus 1353 estimated, but margin performance looked very strong, 27.8 versus estimated 22, as a result of which the bottom line number was up 12% if I'm not wrong. Yes, 12.2% at 271 versus 242. So good going. Watch out for Castrol. That's a thumbs up too. And last one on the thumbs up list, Paradeep Phosphates, revenues up 58%. Margin came off, but because 58% growth in revenue and 45% growth in bottom line, I think that's why I've given it a thumbs up. The net profit was up about 45% for Paradeep Phosphates. So do watch out for this one. I've given it a thumbs up. Let's see if it lasts that way. Okay, what else? On the thumbs down list, Welspun Enterprises, revenues up, but margins came off, as a result of which the bottom line numbers didn't look all that great either relative to the top line, and therefore this one could see a bit of a negative reaction. Tata Chemicals will see a negative reaction for sure. Revenues were down 3.8%, but margins came off rapidly, as a result of which there was a net loss, and this stock will react negatively today, I'm sure of it. It was in our Heard on Street segment yesterday. Shalby, revenues were up, but margins came off rapidly, 12.3 versus estimated 18.6, as a result of which a net loss again. Net loss of 1.8 crores. The estimate was profit of 19 crores. So Shalby will react negatively as well in the session today. KC International has done quite well, but recently as a stock, but the margins flattish, bottom line number below estimates, as a result of which I would reckon that this stock will react negatively today. So do watch out for this one. Some key brokerage calls maybe, if you will. Weak results for Dredging Corp, Thomas Cook and Garden Reach. All these three might have a negative reaction as well in the session today. And then you watch out for some brokerage calls. So UBS on PCBL, erstwhile Phillips Carbon Black. They say they initiated with a buy rating. Target price is 600. Current price is 403. They say it's in the midst of a transformation and re-rating to follow. The transformation is, it's transforming into a chemical technology platform according to UBS, and they expect a 27% earnings CAGR over FY24 to 29, ROC expansion to 29 from 17. But this, viewers, 27% earnings CAGR over 5 years is a solid set of numbers. Watch out for PCBL, could be an interesting one. There is Goldman Sachs on Adani Ports. They've maintained a buy, target price 1560. Results better than estimated. Market share gains have happened because of the correction. Valuations are good. So that's why. And last but not the least, there is a note, I think, from Jeffries on Nuama. So watch out for that one too in the session today. So these are the long and short of what we have on the trade setup today. Thank you so much for tuning in.